You're bleeding money into this house every month, and you have the audacity to lecture me about financial responsibility." My father's voice thundered across the mahogany table of our family's dining room, his face flushed red with indignation. Behind him, my mother stood with her arms crossed, her pearl necklace catching the afternoon light as she nodded in silent agreement. They had cornered me here, demanding to know why I refused to co-sign another loan for my brother Marcus's latest business venture. Before we jump back in, tell us where you're tuning in from, and if this story touches you, make sure you're subscribed, because tomorrow, I've saved something extra special for you. What they didn't know was that I held the deed to this very house they were so proud of. What they couldn't fathom was that Pacific Coast Lending, the mortgage company that had financed their dream home 15 years ago, now belonged to me. While they saw Sarah Mitchell, their disappointing youngest daughter who worked some mundane job in finance, I had quietly built a mortgage empire worth over $200 million. The irony wasn't lost on me as I sat in the very living room I technically owned, listening to my parents explain why I should be more grateful for everything they had provided. The Persian rug beneath my feet, the crystal chandelier overhead, the imported Italian marble fireplace, all of it secured by a mortgage I now controlled through a web of acquisitions and strategic investments that had taken me 8 years to orchestrate. I had learned long ago to keep my professional success separate from my family life, maintaining the facade of Sarah the struggling bank employee while building my reputation as S.M. Reynolds, the mysterious founder of Reynolds Capital Holdings. The name on all my business documents bore my initials and my mother's maiden name, creating enough distance that even the most curious family member wouldn't make the connection. The whole confrontation had started innocently enough. Marcus had burst through the front door during our monthly family dinner, his usual dramatic flair on full display as he announced his latest entrepreneurial vision. At 28, my older brother had already burned through 3 failed startups, each one funded generously by our parents' retirement savings and emotional support. This time, he wanted to launch an upscale food truck business targeting the tech workers in downtown Seattle. He had spreadsheets, he claimed, and market research, and connections with suppliers who could get him premium ingredients at wholesale prices. All he needed was someone with decent credit to co-sign a business loan for $200,000. When I politely declined, explaining that I couldn't take on that kind of financial liability, the room erupted. My father launched into his familiar speech about family loyalty and shared responsibility. My mother chimed in with gentle reminders about all the opportunities I had been given, all the sacrifices they had made for my education, all the times they had supported me through difficult periods. The truly maddening part was that none of it was accurate. I had earned academic scholarships for both my undergraduate and graduate degrees. I had worked 2 jobs throughout college to cover my living expenses. When I started my first entry-level position at Northwest Community Bank 8 years ago, I had moved into a studio apartment and lived on ramen noodles to save every possible dollar for my real goal. That goal had always been real estate finance. While my classmates in business school talked about investment banking and consulting careers, I was studying mortgage markets, analyzing lending patterns, and developing theories about how technology could revolutionize the way people accessed home financing. My senior thesis on algorithmic risk assessment in residential lending had caught the attention of several industry professionals, including Janet Morrison, who would later become my first major investor. But my family had never shown the slightest interest in understanding my work. When I tried to explain my research or share my excitement about new developments in financial technology, their eyes would glaze over. The conversation would quickly shift to Marcus's latest networking event, or my parents' social commitments, or anything that seemed more immediately relevant to their daily lives. The pattern had been established early and reinforced consistently. Marcus was the golden child, the natural entrepreneur with charisma and vision. I was the dependable daughter who played it safe with a boring job at a local bank. Marcus took risks and dreamed big. I was practical to the point of being unimaginative. This narrative had persisted despite mounting evidence to the contrary. When Marcus's organic juice bar failed after 8 months, losing $40,000 of my parents' money, they immediately began helping him develop his next concept. When I received a promotion to senior loan officer at the bank, my mother asked if that meant I might finally meet a nice banker to marry. When Marcus's artisanal soap company collapsed due to poor inventory management and customer complaints about skin reactions, my parents reassured him that failure was simply part of the entrepreneurial journey. When I quietly left the bank to start my own financial consulting practice, my father warned me not to get carried away with unrealistic ambitions. The consulting practice had been my cover story, technically accurate but deliberately understated. I did provide consulting services to small businesses and individual clients seeking to understand their financing options. What I didn't mention was that this consulting work had led to partnerships with local real estate developers, who appreciated my ability to structure creative financing solutions for their projects. Those partnerships had generated enough capital for me to begin acquiring distressed mortgages from banks looking to clean up their balance sheets after the housing market downturn. I started small, purchasing individual loans at significant discounts and working with homeowners to restructure their payments in ways that kept them in their homes while generating steady returns for my growing portfolio. The work was painstaking and required skills I had developed through years of studying both the technical and human sides of mortgage lending. I could analyze the financial metrics that determined whether a loan modification made mathematical sense, but I could also sit across from a struggling family and help them understand their options with patience and genuine empathy. Word spread quickly in the tight-knit community of real estate professionals. Realtors began referring clients who were facing foreclosure. Mortgage brokers recommended my services to banks dealing with complicated workout situations. Financial planners sent wealthy clients who wanted to diversify into real estate investments but lacked the expertise to evaluate opportunities properly. Within 2 years, I had formalized these relationships into Reynolds Capital Holdings, a mortgage investment firm that specialized in purchasing, restructuring, and servicing residential loans throughout the Pacific Northwest. My business model was simple: buy distressed mortgages at deep discounts, work with borrowers to create sustainable payment plans, and generate steady returns through performing loans while helping families stay in their homes. The business grew organically as my reputation for fair dealing and creative problem-solving spread throughout the regional real estate community. By my 4th year, I was managing over $50 million in mortgage assets. By year 6, that figure had grown to $120 million. Now, 8 years after leaving the bank, Reynolds Capital Holdings managed over $200 million in mortgage investments across Washington, Oregon, and Northern California. The growth had been deliberate and strategic rather than flashy or attention-seeking. I maintained a small staff of highly qualified professionals who shared my commitment to ethical lending practices and borrower advocacy. Our offices occupied a modest suite in a professional building near downtown Seattle, nothing that would attract unwanted attention or suggest the true scope of our operations. I drove a practical Honda sedan that was reliable but unremarkable. I lived in a comfortable but not ostentatious townhouse in a middle-class neighborhood. I shopped at Target and cooked most of my meals at home. To any casual observer, including my family members, I appeared to be exactly what I claimed: a financial consultant who made a decent living helping people navigate mortgage challenges. This careful cultivation of modest appearances served multiple purposes. It allowed me to move freely in professional circles without the complications that often accompany visible wealth. It helped me relate authentically to clients who were facing financial difficulties. Most importantly, it protected me from the family dynamics that had shaped so much of my childhood and young adult years. I had watched Marcus receive unconditional support for every venture, regardless of its viability or his level of preparation. I had seen my parents sacrifice their own financial security to fund his dreams, while simultaneously expressing concern about my practical but unexciting career choices. I had learned that in my family's value system, the appearance of ambition and success mattered more than actual achievement or sustainability. So I had chosen a different path entirely. Rather than seeking their approval or trying to convince them of my capabilities, I had simply opted out of their assessment process altogether. I built my success quietly and independently, creating a professional identity that existed entirely separate from my family relationships. The strategy had worked remarkably well until moments like this one, when the two worlds collided in ways that created almost unbearable cognitive dissonance. Sitting in the living room of a house I owned, listening to my parents lecture me about financial responsibility while they prepared to risk their retirement savings on another of Marcus's unproven concepts, required a level of self-control I sometimes wondered if I could maintain indefinitely. The house itself had come into my portfolio 18 months ago through a complex transaction that perfectly illustrated how the mortgage industry operated behind the scenes. My parents had refinanced their original loan several times over the high years, chasing lower interest rates and occasionally pulling out equity for various expenses. Their current mortgage had been sold by the originating bank to a regional lending institution, which had subsequently packaged it with hundreds of similar loans into a mortgage-backed security. When that lending institution faced liquidity challenges during a period of economic uncertainty, they had sold their entire residential mortgage portfolio to a consortium of investors led by Reynolds Capital Holdings. The transaction involved over 800 individual loans representing nearly $300 million in outstanding principal, purchased at a significant discount due to the seller's urgent need for cash. I had structured the deal to maintain all existing borrower relationships and payment terms. My parents continued making their monthly payments to the same servicer they had always used, receiving the same statements and dealing with the same customer service representatives. From their perspective, nothing had changed about their mortgage arrangement. From my perspective, I now held the legal right to their monthly payments and, in the event of default, could initiate foreclosure proceedings that would ultimately result in my ownership of their physical property as well as their debt. The irony was delicious and terrible at the same time. I had never intended for this specific situation to develop. When I bid on the portfolio, I was focused on the overall financial metrics and geographic distribution of the loans. I certainly knew my parents' address and could have checked whether their mortgage was included, but I had deliberately avoided looking. I wanted my investment decisions to be based on objective financial analysis rather than personal considerations. Only after the transaction closed and I received the detailed loan files did I discover that I now held my parents' mortgage. My initial reaction had been surprise, followed quickly by amusement, and then by a growing sense of the profound absurdity of the situation. Here I was, a woman they considered financially naive and professionally limited, holding legal authority over their most significant asset and financial obligation. The monthly payments they made with such pride, the equity they had built through years of responsible homeownership, the security they felt in their stable housing situation, all of it now depended on the business decisions of the daughter they consistently underestimated. I had considered selling their specific loan to another investor, removing myself from the ethical complexity of the situation. But I had ultimately decided against it for both practical and personal reasons. Practically, their mortgage was performing exactly as expected and represented a solid investment that aligned with my portfolio strategy. Personally, I found a certain satisfaction in knowing that their financial security now depended, however indirectly, on my professional competence. The months since that discovery had been filled with moments like this one, when family conversations about money and responsibility took on layers of meaning that only I could fully appreciate. When my father pontificated about the importance of building wealth through real estate investments, I nodded along while privately calculating the returns I was generating from his monthly payments. When my mother worried about market volatility affecting their retirement planning, I reassured her while knowing that I had structured their loan to protect them from payment increases regardless of broader economic conditions. The secrecy had become more challenging as my success continued to grow. Reynolds Capital Holdings was now large enough to attract attention from industry publications and investment conferences. I had been invited to speak at mortgage banking associations and real estate investor meetings. Other firms regularly approached me about potential partnerships or acquisition opportunities. Managing this growing professional visibility while maintaining my cover story as a small-time financial consultant required increasingly creative explanations. When family members occasionally asked about my work, I stuck to generic descriptions of helping people with loan applications and refinancing decisions. Preparing and narrating this story took us a lot of time, so if you are enjoying it, subscribe to our channel. It means a lot to us. Now back to the story. When they wondered why I seemed to have more flexibility in my schedule than typical employees, I explained that consulting work allowed for irregular hours and project-based income. The explanations were technically accurate but deliberately incomplete. I did help people with loan applications, just not in the way they imagined. I did have flexibility in my schedule, but because I owned the company rather than working for hourly wages. I did work with real estate professionals, though as their business partner rather than their service provider. This careful management of information had allowed me to maintain family relationships without subjecting my professional achievements to their pattern of dismissal and undermining. I had learned from watching Marcus's experiences that sharing ambitious plans with our parents often resulted in unwanted advice, unrealistic expectations, and eventual disappointment when reality failed to match their projections. By keeping my actual accomplishments private, I avoided both the pressure of their involvement and the pain of their inevitable criticism. I could build my business according to my own values and timeline without having to defend my choices or justify my methods to people who fundamentally misunderstood both the industry and my role within it. But the strategy also meant accepting a peculiar form of invisibility within my own family. While Marcus received constant attention and support for his entrepreneurial efforts, my actual entrepreneurial success remained completely unacknowledged. While my parents worried about my financial future and urged me to be more ambitious, I was quietly building the exact kind of wealth and security they claimed to want for me. The cognitive dissonance was particularly acute during conversations about money and career planning. When my father shared investment advice he had read in financial magazines, I listened politely while managing a portfolio that generated more annual income than his entire professional salary. When my mother suggested I should consider pursuing an MBA to advance my career prospects, I nodded thoughtfully while running a company that regularly outperformed graduates of top business schools. These moments required a level of emotional discipline that sometimes felt almost superhuman. The natural impulse to correct misconceptions or share achievements had to be constantly suppressed in service of maintaining the broader strategy. I had to remind myself regularly that seeking their validation or approval would likely result in the same patterns of minimization and control that had characterized their response to my academic and early professional accomplishments. The current confrontation over Marcus's loan request represented a perfect example of these dynamics in action. Rather than simply accepting my decision as that of an independent adult with her own financial priorities and obligations, they had immediately shifted into familiar patterns of guilt and manipulation designed to override my stated boundaries. My father's approach was characteristically direct and authoritative. As a successful corporate lawyer, he was accustomed to using logical arguments and forceful presentation to achieve his objectives. His lecture about family responsibility and shared sacrifice was delivered with the same confidence and conviction he might use when addressing a jury or negotiating a contract. My mother's contribution was more subtle, but equally manipulative. Her gentle reminders about gratitude and opportunity were couched in loving concern, making it difficult to challenge them without appearing ungrateful or selfish. She had perfected the art of emotional pressure that felt like nurturing support. even when it was clearly designed to produce specific behavioral outcomes. Marcus himself remained largely silent during these exchanges, allowing our parents to advocate for his interests while maintaining the appearance of being simply the beneficiary of family generosity, rather than an active participant in the manipulation. He had learned to position himself as the victim of circumstances rather than the author of his own financial difficulties, creating space for others to feel heroic about rescuing him from situations he had created through poor planning and impulsive decision-making. The pattern was so familiar and well-established that it operated almost automatically. Marcus would present an opportunity that required financial support. Our parents would immediately begin advocating for family members to contribute to his success. Anyone who hesitated or declined would be subjected to increasingly intense pressure until they either capitulated or found a way to exit the situation entirely. I had become skilled at managing these dynamics without causing open conflict, but the effort required was exhausting and emotionally draining. Each conversation required careful calculation about how much resistance I could show without triggering escalated pressure tactics. Each family gathering involved strategic preparation to avoid topics that might lead to financial discussions. The strain had intensified recently as my professional success continued to grow while my family relationships remained frozen in patterns established decades earlier. The gap between my actual circumstances and their perception of my situation had become so wide that maintaining the fiction sometimes felt absurd. Reynolds Capital Holdings now employed 12 full-time professionals and managed mortgage portfolios for institutional investors across 3 states. Our annual revenue had exceeded $20 million for the past 2 years. My personal net worth had reached levels that would have seemed impossible when I first declined to participate in Marcus's business ventures. Yet here I sat, being lectured about financial responsibility by people who remained completely unaware of what I had actually accomplished. The conversation continued around me, while I maintained the appearance of engaged attention, nodding at appropriate moments, and offering non-committal responses that neither agreed nor disagreed with their various points. The afternoon sun slanted through the floor-to-ceiling windows of the living room, illuminating dust particles that danced in the air between us. I found myself studying the details of the space I now owned, noting improvements and maintenance needs that would soon become my responsibility rather than theirs. The hardwood floors showed signs of wear that would require refinishing within the next few years. The crown molding had developed small cracks that suggested minor settling in the foundation. The window treatments were beginning to fade from years of sun exposure and would need replacement to maintain the home's elegant appearance. These observations felt surreal as my father continued his speech about the importance of supporting family members during challenging economic times. He gestured broadly toward the windows, mentioning the investment they had made in this house and how it represented their commitment to building generational wealth that would benefit their children's futures. The generational wealth conversation was particularly ironic given that I was now positioned to inherit not just their physical assets, but also the debt secured by those assets. When they eventually passed away, I would essentially be paying myself the remaining balance on their mortgage while also taking ownership of the property that secured it. I had not yet decided how to handle that eventual situation. The ethical implications were complex and unprecedented in my experience. Standard business practices would suggest treating the inheritance like any other mortgage portfolio transaction, but family relationships obviously created additional considerations that purely financial analysis could not address. For now, I was content to let the situation develop naturally while maintaining my professional obligations and family relationships as separate spheres of activity. The monthly mortgage payments continued to arrive on schedule, generating steady returns that contributed to my company's overall performance. My parents continued to enjoy their home and build equity through their regular payments, unaware that their financial security now depended on the business acumen of the daughter they consistently undervalued. The arrangement felt like poetic justice, though I was careful not to let that satisfaction influence my professional decision-making. Their loan received the same careful management and borrower-friendly servicing that I provided to all clients in my portfolio. I maintained the same ethical standards and commitment to fair dealing that had built my company's reputation in the industry. But I would be lying if I claimed not to enjoy the private knowledge that their financial stability now rested on the foundation of success they had never bothered to recognize or acknowledge. Every monthly payment they made represented a small validation of the professional competence they had consistently questioned. As the conversation began to wind down, with my father apparently confident that he had made his case effectively, and my mother adding final touches to her emotional appeals, I realized that the moment had arrived for me to respond to their request. They were waiting for me to acknowledge the wisdom of their arguments and agree to co-sign Marcus's loan application. Instead, I stood up from the comfortable leather chair where I had been sitting and walked to the windows overlooking their meticulously landscaped backyard. The garden represented thousands of dollars in professional design and ongoing maintenance, another monthly expense that my mortgage payments were helping to support. "I'm not going to co-sign the loan," I said quietly, my voice calm but firm. "Marcus is an adult, and his business ventures are his responsibility. I have my own financial obligations and priorities that don't include underwriting his entrepreneurial experiments." The silence that followed my statement felt heavy with surprise and disappointment. I could hear my mother's sharp intake of breath and my father's pen clicking against his notepad where he had been taking notes during his presentation. Marcus shifted uncomfortably on the sofa, probably calculating how to approach other potential co-signers now that his primary target had declined to cooperate. "But, Sarah," my mother began, her voice taking on the wounded tone that had been so effective in shaping my behavior throughout childhood and adolescence. "After everything we've done for you, after all the opportunities we've provided, don't you think you owe it to your brother to help him succeed?" The question hung in the air between us, loaded with decades of family history and unspoken assumptions about obligation and gratitude. It was the same question, delivered in various forms, that had been used to justify countless decisions that prioritized Marcus's interests over my own boundaries and preferences. I turned away from the window to face them directly, seeing my parents and brother clearly, perhaps for the first time in years. They sat there looking expectant and slightly confused, genuinely unable to understand why their reliable formula for gaining my compliance had suddenly stopped working. What I wanted to tell them would have to wait for another day, perhaps another year, or maybe forever. What I wanted to explain about actual financial responsibility, about building sustainable success through careful planning and ethical practices, about the difference between supporting someone's growth and enabling their poor decisions, would require conversations they weren't yet ready to have. Instead, I picked up my purse from the side table and headed toward the front door, the same door I had walked through countless times as their daughter, never as their creditor. "I'll see you all next month for dinner," I said over my shoulder, maintaining the fiction that would allow us to continue our family relationships while I continued building the empire they couldn't imagine and wouldn't understand. As I drove away from the house I owned, making the monthly payment to myself, I wondered how much longer I could maintain this delicate balance between professional success and family invisibility. The gap between who I was and who they thought I was had become a chasm that grew wider with each passing month. Someday, the truth would emerge. Someday, they would discover that their overlooked daughter had built the exact kind of generational wealth they claimed to value, had developed the financial acumen they insisted she lacked, had created the security and independence they worried she would never achieve. When that day came, I wondered if they would see it as vindication of their parenting or as evidence of their profound failure to recognize the person who had been sitting at their dinner table all along. The rain drummed against the windows of my downtown Seattle office as I reviewed the quarterly portfolio reports that would never make their way to my family's dinner table conversations. Reynolds Capital Holdings had just closed another major acquisition, bringing our total managed assets to $230 million. Yet tomorrow, I would sit through another family brunch where my mother would worry aloud about my career prospects and my father would offer unsolicited advice about building wealth through conservative investments. 8 years had passed since I first walked away from my secure position at Northwest Community Bank. Armed with nothing but a business plan, $27,000 in savings, and an unshakable belief that the mortgage industry was ripe for disruption by someone who actually cared about the human beings behind the loan applications. My family had watched that transition with the bemused tolerance typically reserved for children announcing their intention to become astronauts or professional athletes. The irony of their dismissal had only deepened as my success grew more pronounced, and their awareness of it remained essentially non-existent. While Marcus continued to cycle through increasingly elaborate business concepts that never progressed beyond the planning stage, I had quietly built exactly the kind of sustainable, profitable enterprise that business schools use as case studies for effective entrepreneurship. The transformation had begun during my final months at the bank, when I started noticing patterns in our foreclosure files that troubled me both professionally and personally. Families were losing their homes not because they were fundamentally unable to pay their mortgages, but because rigid institutional policies made no allowance for temporary setbacks or changing circumstances. A construction worker injured on the job would miss 3 payments during his recovery period and find himself facing foreclosure proceedings, despite having paid consistently for 8 years and possessing both the ability and desire to resume payments once he returned to work. These situations represented failures of imagination rather than failures of creditworthiness. The bank's standard procedures, designed to minimize administrative costs and legal complications, routinely discarded perfectly viable borrowers who needed creative solutions rather than rigid enforcement. I began staying late to study these files, developing alternative payment structures that could have kept these families in their homes while actually improving the bank's long-term returns. When I presented my analysis to the senior management team, suggesting that the bank could both improve its financial performance and reduce foreclosure rates by implementing more flexible modification procedures, the response was politely dismissive. The existing systems worked adequately, they explained. Change involved risk and complexity that could create more problems than it solved. My suggestions were filed away in a folder that I suspected would never be opened again. That rejection became the catalyst for everything that followed. If established institutions wouldn't implement solutions that could help struggling homeowners while generating superior returns, then perhaps there was room in the market for someone who would. I began developing the business model that would eventually become Reynolds Capital Holdings during my lunch breaks and weekend hours, mapping out a strategy for purchasing distressed mortgages and restructuring them in ways that served both borrower and investor interests. The plan required more capital than I possessed, but it also required something equally valuable that most investors lacked: deep understanding of both the technical aspects of mortgage finance and the human dynamics that determined whether payment modifications would actually succeed. I had spent 3 years processing loan applications, reviewing credit histories, and conducting borrower interviews. I understood how to distinguish between temporary financial setbacks and fundamental inability to pay. More importantly, I had learned to recognize the difference between borrowers who needed help and those who needed accountability. My first major break came through Janet Morrison, a commercial real estate developer who had been impressed by my work on a complex refinancing package for one of her mixed-use projects. Janet had built her business by identifying undervalued properties in transitioning neighborhoods, renovating them thoughtfully, and creating spaces that served both community needs and investment returns. Her approach to real estate development aligned perfectly with my vision for mortgage portfolio management. When I explained my concept for purchasing and restructuring distressed mortgages, Janet immediately grasped both the financial opportunity and the social impact potential. She had seen too many neighborhood revitalization projects derailed by waves of foreclosures that could have been prevented with more flexible lending policies. My proposal offered a way to stabilize communities, while generating consistent returns through performing loans rather than property liquidation. Janet's initial investment of $500,000 allowed me to purchase my first portfolio of distressed mortgages from a regional bank that was eager to clean up its balance sheet before quarterly reporting. The portfolio contained 47 individual loans representing nearly $12 million in outstanding principal, purchased at a 62% discount due to their non-performing status. Working with each borrower individually, I was able to restructure 39 of those loans into sustainable payment plans that reflected their current financial circumstances while protecting the long-term value of the underlying properties. The remaining 8 properties required different solutions, including short sales that minimized losses for all parties and cash-for-keys arrangements that allowed families to transition to more appropriate housing without the devastating credit. Impact of foreclosure. The process was labor-intensive and emotionally demanding. Each situation required careful analysis of the borrower's financial history, current circumstances, and realistic prospects for future income stability. Many of the conversations involved families facing the loss of homes where they had raised children and built communities. The weight of those decisions, the knowledge that my recommendations would determine whether children could finish the school year in familiar classrooms, or whether elderly homeowners could age in place with dignity, demanded a level of care and attention that purely profit-driven investors rarely provided. But the results validated both the business model and the social mission that drove it. Within 18 months, 93% of the restructured loans were performing according to their modified terms. The portfolio generated annual returns that exceeded traditional mortgage investments while maintaining home ownership rates that far surpassed industry standards for distressed asset management. Word of these outcomes spread quickly through the network of real estate professionals, housing counselors, and community development organizations that served the region's diverse neighborhoods. Referrals began arriving from sources I had never directly contacted. Legal aid attorneys representing clients facing foreclosure, nonprofit housing organizations seeking alternatives to displacement, even competing banks that lacked the expertise or desire to handle complex workout situations. Each successful case study strengthened my reputation and expanded my network of professional relationships. Real estate agents who had watched families lose homes to inflexible foreclosure procedures began referring their clients to me when traditional modification requests were denied. Mortgage brokers who specialized in serving first-time home buyers sent clients who had fallen behind on payments due to job losses or medical emergencies. As my caseload grew, I formalized the business structure and hired my first employees. Maria Santos, a bilingual housing counselor with 15 years of experience working with immigrant families, became my client relations manager. Her ability to explain complex financial concepts in accessible language while maintaining cultural sensitivity proved invaluable when working with borrowers who had learned to distrust financial institutions through bitter experience. James Chen, a former bank credit analyst who had grown frustrated with the industry's emphasis on loan denials rather than creative approvals, joined as my portfolio manager. His expertise in credit assessment and payment structuring allowed us to develop increasingly sophisticated approaches to loan modification that balanced borrower needs with investor requirements. Together, we refined the processes that would become the foundation of Reynolds Capital Holdings' competitive advantage. Every potential portfolio acquisition was evaluated not just for its financial metrics, but for the likelihood that borrowers could be successfully transitioned to sustainable payment arrangements. Every loan modification was structured to provide both immediate payment relief and long-term asset protection. Every borrower interaction was conducted with the understanding that home ownership represented far more than a financial transaction for most families. The business grew organically as our track record attracted attention from larger institutional investors who recognized the value of our specialized approach. Insurance companies seeking stable returns from real estate investments became regular clients. Pension funds looking to diversify their portfolios with assets that provided both income and social impact began allocating capital to our managed accounts. Regional banks that had previously sold their distressed mortgage portfolios to institutional liquidators started approaching us with opportunities to purchase and restructure loans before they reached foreclosure status. This proactive approach allowed us to intervene earlier in the financial distress cycle, often preventing payment defaults entirely through temporary modifications that addressed short-term cash flow problems before they became long-term credit. Impairments. The expansion required increasingly sophisticated operational systems and risk management procedures. I hired additional staff with expertise in loan servicing, regulatory compliance, and portfolio analysis. We implemented technology platforms that could track payment performance, modification outcomes, and borrower communication across hundreds of individual loans simultaneously. By my third year in business, Reynolds Capital Holdings was managing over $50 million in mortgage assets across Washington, Oregon, and Northern California. Our success rate in converting non-performing loans to sustainable payment arrangements had attracted attention from federal housing agencies and academic researchers studying alternatives to traditional foreclosure procedures. Despite this growing recognition within professional circles, I maintained strict separation between my business identity and my family relationships. When relatives asked about my work, I continued to describe myself as a financial consultant who helped people understand their mortgage options. The description was technically accurate while being deliberately incomplete, allowing me to avoid both unwanted scrutiny and unhelpful advice from people who fundamentally misunderstood the industry. This careful management of information became more challenging as my professional profile continued to rise. Industry publications began featuring articles about alternative approaches to distressed mortgage management, often highlighting Reynolds Capital Holdings as a model for ethical and effective portfolio investment. I was invited to speak at conferences hosted by the Mortgage Bankers Association and the National Association of Housing Counselors. The speaking engagements required particular discretion, since they often attracted local media coverage that could potentially reach my family's social circles. I developed strategies for participating in professional development opportunities while maintaining my privacy, including using my initials rather than my full name in marketing materials and declining interview requests that might result in local newspaper coverage. The precautions seemed excessive until I overheard a conversation at my cousin Jennifer's wedding reception that reminded me why they were necessary. My Aunt Patricia was discussing real estate investments with another guest, mentioning an article she had read about innovative mortgage companies that were helping families avoid foreclosure while generating impressive returns for investors. She wondered aloud whether Sarah, referring to me, might know anything about these kinds of opportunities since she worked in banking and finance. My father's response was swift and dismissive. Sarah worked for a small consulting practice that helped people fill out loan applications. Nothing sophisticated enough to understand complex investment strategies like the ones described in the article. The casual certainty of his dismissal, delivered to a table of extended family members who nodded in agreement, crystallized everything I had learned about managing their expectations and protecting my professional achievements from their limited understanding. They weren't being deliberately cruel or malicious. They simply couldn't conceive of me operating at the level described in the article, so they automatically assumed I must be involved in something simpler and less significant. That assumption had become increasingly difficult to maintain as my business continued expanding beyond anything they could ignore indefinitely. By my fifth year, Reynolds Capital Holdings employed 8 full-time staff members and managed portfolios for institutional clients across the western United States. Our annual revenue had reached $15 million, and my personal compensation had grown to levels that would have been immediately noticeable if I hadn't been careful to maintain my modest lifestyle and conservative spending patterns. The discipline required to live significantly below my means while building long-term wealth had actually strengthened my business operations by forcing me to distinguish between necessary expenditures and status-driven consumption. Every business decision was evaluated based on its contribution to long-term sustainability rather than short-term appearance of success. I drove a reliable Honda Civic that was 5 years old but meticulously maintained. I lived in a comfortable townhouse in a middle-class neighborhood, a property that I had purchased as both a primary residence and a real estate investment. My clothing was professional but not designer, purchased from department stores rather than boutiques that might attract unwanted attention. These choices allowed me to blend seamlessly into the background of family gatherings while building financial reserves that supported increasingly ambitious business expansion. Rather than spending money on luxury items that would have raised questions about my income sources, I reinvested every possible dollar into portfolio acquisitions and business development activities that compounded my long-term wealth accumulation. The strategy had practical benefits beyond maintaining my cover story. Conservative personal spending habits reinforced the financial discipline that made my business successful. When I counseled borrowers about managing their household budgets, to support modified payment plans, I could speak from genuine experience about distinguishing between wants and needs, about finding satisfaction in financial security rather than material display. This authenticity strengthened my relationships with clients who were often struggling with overconsumption that had contributed to their financial difficulties. They could sense that my recommendations came from personal conviction rather than theoretical knowledge, making them more likely to trust my guidance and follow through on payment commitments. The business benefits extended to my relationships with institutional investors as well. Portfolio managers who were accustomed to dealing with flashy investment firms appreciated my focus on substance over style. They could see that Reynolds Capital Holdings allocated resources to operational excellence rather than marketing expenses, suggesting that their capital would be used efficiently rather than wastefully. As my 6th year in business began, I made the decision to pursue more aggressive growth opportunities that would require substantial additional capital and operational expansion. The mortgage market was experiencing changes that created unprecedented opportunities for specialized investors who could navigate complex regulatory requirements while maintaining high ethical standards. New federal programs were being developed to encourage loan modifications that kept families in their homes while protecting investor interests. Community development financial institutions were seeking partners who could help them expand their lending capacity in underserved markets. Regional banks were facing regulatory pressure to improve their modification success rates and reduce foreclosure volumes. All of these trends favored companies like Reynolds Capital Holdings that had demonstrated expertise in borrower-friendly portfolio management and sustainable loan restructuring. But capitalizing on these opportunities would require operational capabilities and financial resources that exceeded my current capacity. After extensive analysis and planning, I decided to pursue a major expansion that would triple our managed assets within 2 years, while adding specialized services for institutional clients who needed more sophisticated portfolio management capabilities. The expansion would require raising $25 million in additional capital while hiring 15 new employees with expertise in areas ranging from regulatory compliance to borrower counseling. The fundraising process introduced me to a network of institutional investors who operated at levels of sophistication that would have impressed even my father, despite his tendency to dismiss my professional capabilities. These were portfolio managers for major pension funds, insurance companies, and endowments who allocated billions of dollars across alternative investment strategies designed to generate consistent returns while supporting beneficial social outcomes. The conversations required demonstrating not just the financial performance of my existing portfolios, but the scalability of my business model and the depth of my understanding of regulatory trends that would shape the industry's future development. I found myself presenting to investment committees that included former Federal Reserve officials, professors from top-tier business schools, and executives from major financial institutions. These presentations demanded a level of technical expertise and strategic thinking that far exceeded anything my family had ever associated with my professional capabilities. I was discussing complex financial instruments, regulatory arbitrage opportunities, and macroeconomic factors that influenced residential real estate markets across multiple geographic regions. The due diligence process involved weeks of detailed review of our operational procedures, financial controls, and portfolio performance metrics. Potential investors sent teams of analysts to examine our loan files, interview our staff members, and verify our claims about modification success rates and borrower satisfaction levels. Throughout this intensive scrutiny, our business model and performance record were consistently validated by independent experts who had no reason to be generous in their assessments. The final investment agreements included performance guarantees and operational requirements that demonstrated the investors' confidence in our ability to execute the planned expansion successfully. When the funding closed, Reynolds Capital Holdings had raised $32 million from a consortium of institutional investors led by Pacific Northwest Pension Fund and supported by 3 regional insurance companies and a community development financial institution. The capital structure gave me majority control while providing the resources needed to pursue expansion opportunities across multiple Western states. The success of this fundraising process was perhaps the most significant validation of my professional competence that I had ever received. These institutional investors had conducted thorough independent analysis of my business operations and strategic vision before committing their capital to my management. Their decision reflected professional judgment based on objective criteria rather than personal relationships or family dynamics. Yet, when I attended my nephew's graduation party the following weekend, the conversation remained focused on my consulting work, helping people understand their financing options. My family had no context for imagining that their modest financial consultant was simultaneously managing a portfolio worth over $100 million and executing expansion plans that would make her one of the most influential mortgage investors in the region. The cognitive dissonance had become almost surreal. I would spend my weekdays negotiating complex transactions with sophisticated institutional investors, and my weekends listening to my father explain basic investment concepts he had read about in financial magazines. I would conduct strategy sessions with executives from major banks on Tuesday and endure lectures about career planning from my mother on Sunday. The separation between these two worlds required constant vigilance and emotional discipline. I had developed techniques for maintaining appropriate responses during family conversations that touched on topics where I possessed expertise they couldn't imagine. I had learned to ask clarifying questions that demonstrated engagement without revealing the depth of my knowledge. I had practiced expressing uncertainty about subjects where definitive answers would have exposed my professional experience. These skills had become second nature through years of careful cultivation, but they extracted an emotional toll that I was only beginning to recognize. Living a double life, even for valid strategic reasons, created a persistent sense of disconnection from the people who should have been my closest supporters and confidants. The isolation was particularly acute during moments of professional triumph or challenge, when I most wanted to share my experiences with family members who cared about my well-being. When Reynolds Capital Holdings received recognition from the Department of Housing and Urban Development for our innovative approaches to foreclosure prevention, I celebrated alone rather than risk the complications that would arise from explaining why I was receiving federal recognition for work they thought I didn't do. When a particularly complex portfolio restructuring required weeks of intensive negotiation with multiple stakeholders, I managed the stress and uncertainty without the emotional support that family relationships should provide during difficult periods. I had chosen professional success over family intimacy, financial independence over emotional connection. The trade-offs had seemed worthwhile when my business was smaller, and my family's dismissal felt like a minor inconvenience rather than a fundamental breach in our relationships. But as my success grew more substantial, and their misunderstanding remained absolute, I began questioning whether the protective strategy that had served me well during the building phase of my career might be preventing the deeper satisfaction that should accompany achievement. The question became more pressing as I approached my 30th birthday, and began contemplating the long-term sustainability of maintaining separate identities for professional and personal relationships. The expansion of Reynolds Capital Holdings would inevitably attract more public attention as we became one of the larger specialized mortgage investors in the Western United States. Industry recognition would likely increase as our portfolio performance continued to outperform market benchmarks while maintaining superior borrower satisfaction rates. Speaking opportunities and media interviews would become more frequent and more difficult to decline without limiting my ability to advocate for policy changes that could benefit both borrowers and responsible investors. At some point, the parallel lives I had been maintaining would converge in ways that forced me to choose between continued secrecy and authentic relationships with my family members. The longer I delayed that reckoning, the more difficult it would become to explain why. I had hidden such significant aspects of my life from people who claimed to care about my happiness and success. But the prospect of revelation also carried substantial risks that went beyond hurt feelings or damaged relationships. My family's pattern of involving themselves in Marcus's business ventures, often in ways that created more problems than they solved, suggested that they might respond to news of my success by demanding roles in my company or influence over my strategic decisions. The thought of my father attempting to provide legal advice for complex mortgage transactions, or my mother suggesting marketing strategies based on her social connections, made me physically uncomfortable. Their involvement, however well-intentioned, could jeopardize relationships with institutional investors who had committed capital based on confidence in my independent judgment and operational expertise. These concerns were not merely theoretical. Marcus's business failures had often resulted from family interference that undermined his decision-making autonomy and created unrealistic expectations about market opportunities. Despite their repeated failures to provide effective guidance for his ventures, my parents continued to insert themselves into his planning processes with suggestions that reflected their social aspirations rather than market realities. I had avoided those complications by maintaining complete separation between my professional activities and family relationships, but that separation had also prevented them from understanding who I had become or what I had accomplished. The GI success that should have been a source of shared pride had instead become a secret that isolated me from the people whose approval I had once desperately wanted. As I reviewed the quarterly reports that summarized another period of exceptional performance, I wondered whether the time had arrived to bridge the gap between my two worlds, regardless of the complications that might follow. The business was now large enough and stable enough to withstand whatever disruptions might result from family involvement. My professional relationships were strong enough to survive whatever awkwardness might arise from introducing my relatives to colleagues who had never heard me mention them. Perhaps most importantly, I had finally developed enough confidence in my own judgment and abilities to maintain appropriate boundaries with family members who might want to become more involved in my business operations than was healthy for either my company or our relationships. The decision would require careful planning and strategic thinking about how to manage the revelation process in ways that honored both my professional obligations and family relationships. But the alternative, continuing to live separate lives indefinitely, had begun to feel more limiting than liberating. The rain continued drumming against my office windows as I contemplated the conversation that would eventually need to happen. The moment when I would finally answer their questions about my work with complete honesty rather than careful deflection. When that day arrived, everything would change between us, for better or worse. But change had become inevitable as my business success made the separation between my professional and personal identities increasingly difficult to maintain. The only remaining question was whether I would control the timing and circumstances of that revelation or allow it to happen, accidentally in ways that might damage both my business and family relationships. The choice was mine to make, and the time for making it was approaching more quickly than I had anticipated. The phone call that changed everything came on a Tuesday morning in November, just as I was reviewing the final documents for our largest portfolio acquisition to date. Maria knocked on my office door with an expression that immediately told me something significant had happened. "Your brother is online too," she said, her voice carefully neutral. "He sounds agitated." I glanced at the caller ID display, confirming Marcus's name, and felt my stomach tighten with familiar dread. Family phone calls during business hours typically meant some kind of crisis that required immediate attention and probably financial assistance. I had been dreading this moment for months, ever since his latest venture into artisanal coffee roasting had shown obvious signs of impending failure. "Marcus," I said after picking up the line, keeping my voice professionally calm despite the anxiety building in my chest. "What's going on?" "Sarah, thank God you answered." His voice was strained with panic and something else I couldn't immediately identify. "I need to ask you something, and I need you to tell me the truth. Are you SM Reynolds?" The question hit me like a physical blow, sucking all the air from my lungs and leaving me speechless for several seconds. In that brief silence, 8 years of carefully maintained separation between my professional and personal lives collapsed into a single moment of exposure that I had always known would eventually arrive, but never felt prepared to handle. "Why are you asking me that?" I managed to say, buying time while my mind raced through possible explanations for how he could have made the connection. "Because I'm sitting in the offices of Pacific Northwest Business Journal with a reporter who's writing a feature story about successful women entrepreneurs in Seattle. She just showed me a photograph from last month's Mortgage Bankers Association conference where you're accepting some kind of industry award. The caption identifies you as Sarah Reynolds, founder and CEO of Reynolds Capital Holdings." My hands began trembling as the full implications of his discovery settled over me. The MBA conference had been one of the few public events where I had allowed photographers, mainly because the recognition was coming from a national organization rather than local media outlets. I had calculated that the risk of family exposure was minimal since none of them followed industry publications or attended professional conferences. That calculation had obviously been wrong. Marcus continued talking, his voice growing more incredulous with each word. "The article says your company manages over $200 million in mortgage investments. It says you've revolutionized distressed asset management and helped thousands of families avoid foreclosure." "Sarah, what the hell is going on? How is this possible?" I closed my eyes and took a deep breath, knowing that the moment I had been dreading and anticipating for years had finally arrived. There would be no more deflection, no more careful explanations about consulting work, no more strategic management of family perceptions. The truth was out, and I would have to deal with whatever consequences followed. "It's possible because it's true," I said quietly. "Reynolds Capital Holdings is my company. I founded it 8 years ago, and yes, we do manage over $200 million in mortgage assets across the western United States." The silence on the other end of the line stretched so long that I began to wonder if the call had been dropped. When Marcus finally spoke again, his voice was barely above a whisper. "But you work as a financial consultant. You help people fill out loan applications. You drive a Honda and live in that little townhouse. You turned down my coffee roasting business because you said you couldn't afford to invest in risky ventures." Each statement felt like an accusation, highlighting the elaborate deception I had maintained through years of careful misdirection and deliberate understatement. The gap between their perception of my circumstances and the reality of my professional achievements had grown so wide that the truth probably seemed impossible to accept. "I do help people with their financing needs," I said, attempting to explain without sounding defensive. "The difference is that I help them as the owner of a mortgage investment company rather than as an employee of someone else's business. And yes, I do drive a Honda and live modestly because I believe in financial discipline and long-term wealth building rather than conspicuous consumption." The coffee roasting investment was a different issue entirely, one that had nothing to do with my ability to afford the risk and everything to do with my assessment of the business plan's viability. Marcus made a sound that might have been laughter or crying. I couldn't tell which. "Jesus, Sarah." Do you realize what this means? Do you understand how this makes the rest of us look? The question revealed everything I had feared about his reaction. Rather than expressing pride in my achievements or curiosity about my journey, his immediate concern was about how my success reflected on him and the rest of our family. The revelation wasn't being processed as good news about my accomplishments, but as embarrassing evidence of their failure to recognize what had been happening under their noses. "It doesn't make you look like anything," I replied firmly. "My business success has nothing to do with your abilities or your choices. We're separate people with different skills and different approaches to building careers." "Don't give me that," he snapped, his panic transforming into anger. "You sat there for years listening to Mom and Dad lecture you about being more ambitious while you were secretly running a company worth hundreds of millions of dollars. You let them worry about your financial future while you were making more money than all of us combined. How is that not about us?" The accusation contained enough truth to make me uncomfortable, but it also revealed a fundamental misunderstanding of the dynamics that had led to my secrecy. I hadn't hidden my success to make them look foolish or to enjoy some private joke at their expense. I had protected my professional achievements from their scrutiny because experience had taught me that their involvement typically created more problems than it solved. I maintained my privacy because I learned early that sharing my ambitions with this family often resulted in unsolicited advice, unrealistic expectations, and eventual criticism when reality didn't match your projections, I said, allowing some of my own frustration to show in my voice. I chose to build something substantial without having to defend every decision to people who had already decided I wasn't capable of understanding complex business concepts. "That's not fair," Marcus protested, though his tone suggested he was beginning to recognize some validity in my explanation. "We've always supported your career. We encouraged you to pursue better opportunities. We wanted you to be successful. You encouraged me to pursue opportunities that made sense to you," I corrected. When I tried to explain my interest in mortgage, finance, and real estate investment, the response was always to suggest that I focus on something more practical and less risky. When I left the bank to start my consulting practice, Dad warned me not to get carried away with unrealistic ambitions. The support was conditional on me staying within boundaries that you found comfortable and comprehensible. The conversation was interrupted by call waiting, and I glanced at the display to see my mother's number. The chain reaction had obviously begun, with Marcus sharing his discovery and my parents demanding immediate explanations for what they were learning about their daughter's secret life. "Marcus, I'm getting another call from Mom. I assume you've already told them what you found out." "I called them right after I called you," he admitted. "They're on their way to your office." Dad canceled his afternoon meetings, and Mom left some charity committee meeting early. "Sarah, they're really upset. Not just confused, but actually angry that you've been lying to them for so long." The prospect of my parents arriving at my office unannounced filled me with dread. Reynolds Capital Holdings occupied a professional space that reflected the serious nature of our business operations, with conference rooms designed for institutional investor meetings and offices that housed sensitive financial information. Having my family storm and demanding explanations would be both personally embarrassing and professionally inappropriate. "I need to call them and arrange to meet somewhere more suitable for this conversation," I said, already reaching for my calendar, to find time for what would undoubtedly be a lengthy and difficult discussion. "Good luck with that," Marcus said with bitter amusement. Dad was practically shouting when I talked to him. He kept saying that you had made fools of all of them, that you had deliberately deceived the family for years while accepting their concern, and advice about your career. Mom was crying and asking how they could have been so blind to what their own daughter was doing. Their reaction confirmed my worst fears about how the revelation would be received. Rather than celebrating my achievements or expressing pride in my success, they were focusing on their own feelings of embarrassment and betrayal. The discovery wasn't being processed as positive news about my capabilities, but as evidence of my fundamental dishonesty and their failure as parents to understand their child. I ended the call with Marcus and immediately dialed my parents' home number, hoping to intercept them before they made the 40-minute drive to downtown Seattle. My mother answered on the second ring, her voice tight with emotion. "Sarah, how could you do this to us?" she said without preamble. "How could you lie to your own family for so many years?" "I didn't lie to you, Mom. I managed my privacy and controlled the information I shared about my professional activities. There's a significant difference between deception and discretion. Don't you dare try to turn this into some kind of semantic argument," my father's voice interjected. He had obviously taken the phone or was listening on an extension. "You deliberately misled us about your circumstances while allowing us to worry about your future and offer advice about career planning. That's deception by any reasonable definition." The conversation was deteriorating exactly as I had feared it would, with emotional accusations and defensive responses replacing any possibility of rational discussion about why I had chosen to maintain separation between my professional and personal lives. "We need to meet and talk about this properly," I said, trying to redirect toward a more constructive approach. "But my office isn't the appropriate place for that conversation. Can we arrange to get together this evening at your house or somewhere else where we can speak privately?" "We're already in the car," my mother replied. "We'll be at your office in 30 minutes, and we're going to see exactly what you've been hiding from us all these years." The line went dead, leaving me staring at the phone and contemplating the impossible task of preparing my staff for a family confrontation that would expose the most carefully guarded secret of my professional life. I had never mentioned my family circumstances to my employees, partly to maintain appropriate boundaries between personal and professional relationships, but also because I had never expected those worlds to collide in such a dramatic and uncontrolled manner. Maria appeared in my doorway again, clearly sensing that something significant was happening based on my expression and body language. "Is everything all right?" she asked with the concerned tone she typically reserved for borrowers facing particularly difficult financial situations. "My parents are on their way here," I said, feeling the absurdity of the statement even as I spoke it. "They just discovered that I own this company, and they're extremely upset that I never told them about it. This is going to be awkward for everyone, and I apologize in advance for whatever disruption it causes." Maria's eyebrows rose in surprise, but her professional composure remained intact. "Should I clear your schedule for the rest of the afternoon? And do you want me to brief the staff about maintaining confidentiality regarding any client information they might overhear during family discussions?" The fact that she immediately grasped the professional implications of the situation and began implementing appropriate protective measures reminded me why I had chosen my employees so carefully. Even in the midst of personal crisis, they remained focused on maintaining the ethical standards and operational security that had built our reputation in the industry. "Yes, please clear my schedule and brief the staff," I said gratefully. "Also, could you set up the large conference room for a private meeting? I think we're going to need space and privacy for what's about to happen." Over the next 25 minutes, I attempted to prepare myself mentally for a conversation I had been both dreading and anticipating for years. The revelation of my business success should have been a moment of family celebration, but instead, it was unfolding as a crisis that threatened to damage relationships that were already strained by years of misunderstanding and emotional distance. I reviewed the key points I wanted to communicate about why I had chosen to maintain privacy about my professional achievements, how my business model worked, and what my success meant for our family relationships moving forward. But I also prepared myself for the possibility that this conversation would result in permanent damage to relationships that had shaped my entire life, regardless of their limitations and frustrations. When my parents arrived, their presence in my office felt surreal in ways I had not anticipated. These were people who had shaped my values, supported my education, and provided the foundation for everything I had accomplished. Yet they looked completely out of place in the professional environment where I had built my most significant achievements. My father immediately began examining the office space with the calculating gaze he typically reserved for evaluating real estate investments or assessing opposing counsel in legal negotiations. My mother stood near the windows overlooking Elliot Bay, her expression suggesting she was trying to reconcile the modest daughter she thought she knew with the successful business owner who could afford premium downtown office space. Marcus arrived 10 minutes later, having driven directly from his meeting with the Business Journal reporter. His presence completed the surreal tableau of my family gathering in the space where I had spent years building the empire they had never imagined I was capable of creating. The conversation that followed would determine whether the revelation of my success would ultimately strengthen or destroy the family relationships that had always been complicated, but never completely broken. As we settled into the conference room where I had negotiated million-dollar transactions with institutional investors, I prepared to explain 8 years of professional achievement to the people who should have been my biggest supporters but had instead become the audience I had most feared disappointing. The truth was finally out, and there would be no going back to the comfortable fiction that had protected us all from confronting the gap between their perceptions and my reality. Whatever happened next would reshape our family dynamics in ways that none of us could predict or control. The silence in the conference room felt suffocating as my family settled into the leather chairs where pension fund managers and insurance executives normally sat to discuss multi-million-dollar investment strategies. My father's eyes swept across the mahogany table, taking inventory of the sophisticated technology systems and professional artwork that decorated the space where I conducted business. They had never imagined I was capable of understanding, let alone managing. My mother clutched her purse in her lap like a shield, her knuckles white with tension as she stared at me with an expression I had never seen before. It wasn't quite anger, though there was certainly fury mixed into the complex emotions playing across her face. It was something closer to profound disappointment mixed with bewilderment, as if she was looking at a stranger wearing her daughter's face. Marcus slouched in his chair with his arms crossed, his initial shock having transformed into something that looked suspiciously like resentment. The brother who had always occupied the role of family entrepreneur, the one whose business ventures had received unconditional support despite their consistent failures, was now confronting the reality that his supposedly unambitious sister had quietly built exactly the kind of empire he had always claimed to be pursuing. "Well," my father said finally, his lawyer voice emerging with the controlled precision he used when cross-examining hostile witnesses, "I think we deserve an explanation. A complete and honest explanation about how long you've been deceiving us, and why you thought that was acceptable behavior toward your own family." The accusation stung because it contained just enough truth to make me defensive, while completely ignoring the valid reasons that had motivated my choices. I had been managing information carefully, but calling it deception felt unfair given their consistent pattern of dismissing my professional interests and capabilities. "I haven't been deceiving anyone," I replied, keeping my voice steady despite the adrenaline coursing through my system. "I've been maintaining appropriate boundaries between my professional activities and family relationships. There's an important difference between those two things." "Oh, please," Marcus interjected with bitter laughter. "Don't try to spin this like you were protecting us or doing us some kind of favor. You sat through years of family dinners listening to us discuss money and business while you were secretly worth more than all of us combined. That's not boundary management, Sarah. That's manipulation." The accusation hit closer to home than I wanted to admit. There had been moments, particularly during recent months as my success grew more substantial, when I had felt uncomfortable listening to financial conversations where my perspective could have been valuable. But sharing that perspective would have required explanations I wasn't prepared to provide, creating a cycle where continued secrecy became easier than gradual revelation. "You're right that I could have contributed more to those conversations," I acknowledged, trying to find middle ground that honored their feelings without accepting complete responsibility for the situation. "But I think you're forgetting the context of how those conversations typically unfolded. When I tried to share my thoughts about real estate investments or business planning, the response was usually dismissive or condescending. That's absolutely not true," my mother protested, her voice rising with indignation. We've always encouraged your career development and supported your professional growth. We celebrated your promotion at the bank and were proud when you started your consulting practice. You celebrated what you understood and were comfortable with, I corrected gently. When I explained my interest in mortgage finance and distressed asset management, Dad suggested I focus on more traditional banking roles that offered better security and clearer advancement paths. When I mentioned wanting to start my own business, Mom worried that I was taking unnecessary risks that could jeopardize my financial stability. The encouragement was real, but it was conditional on me pursuing opportunities that fit within your framework of appropriate career choices for women. In general, and for me specifically, anything that seemed too ambitious or unconventional was met with gentle discouragement, disguised as protective concern. My father's face flushed red, a warning sign I recognized from childhood confrontations when his patience was approaching its limits. Don't you dare try to make this about our supposed limitations or outdated gender attitudes, he said, his voice taking on the edge that had intimidated opposing counsel for decades. This is about trust and honesty within a family. This is about you making deliberate choices to exclude us from major aspects of your life while accepting our concern and support. We worried about you, Sarah. We genuinely worried about your financial future and your career prospects. We offered advice and assistance because we love you and want you to succeed, and all the while, you were letting us worry unnecessarily, while building a business empire that made our concerns completely irrelevant. The pain in his voice was unmistakable, and for the first time since the confrontation began, I felt a genuine pang of regret about the choices I had made. They had worried about me, and their worry had been sincere, even if it was based on underestimating my capabilities. By maintaining my secrecy, I had allowed them to experience unnecessary anxiety about my well-being while protecting myself from their potential interference. You're right that I could have spared you some of that worry, I said, softening my tone in response to the genuine hurt I was hearing. But I need you to understand why I made the choices I did. This family has a pattern of becoming very involved in business ventures, often in ways that create additional pressure and complications for the person trying to build something. I watched Marcus cycle through 3 failed startups, each one accompanied by extensive family input about marketing, strategies, financial planning, and operational decisions. That input was well-intentioned, but it often conflicted with professional advice he was receiving from people with industry expertise. The result was confusion, conflicting priorities, and additional stress during periods when he needed to focus on execution rather than managing family expectations. Marcus shifted uncomfortably in his chair, clearly recognizing the accuracy of my description while resenting its implications for his own business failures. You think our support sabotaged my ventures? He asked with defensive hostility. I think family involvement in business creates complex dynamics that are difficult to manage effectively, I replied diplomatically. When people who love you want to help, it becomes very hard to maintain the kind of objective decision-making that successful businesses require. Personal relationships and professional relationships operate according to different rules, and mixing them often creates problems for both. That's a convenient excuse for shutting us out completely, my mother said, her hurt transforming into anger. Instead of finding ways to include us appropriately, you just decided we weren't trustworthy enough to know what you were actually doing with your life. It wasn't about trustworthiness, I said, feeling the conversation sliding toward irreparable damage despite my attempts to explain my reasoning. It was about maintaining the independence I needed to build something substantial without having to navigate family politics and emotional dynamics at the same time. Every successful entrepreneur I know talks about the importance of surrounding yourself with people who believe in your vision and understand your industry. I couldn't get that kind of support from family members who thought my ambitions were unrealistic and my expertise was limited. So I found it elsewhere, from mentors and colleagues and investors who could evaluate my ideas based on their merits rather than their concerns about my personal well-being. The explanation seemed to land differently with each family member. My father looked thoughtful, perhaps recognizing some validity in my concerns about family involvement complicating business operations. My mother appeared more hurt than angry, focusing on the emotional distance my choices had created rather than their practical justifications. Marcus remained visibly resentful, clearly struggling with the revelation that his supposedly less ambitious sister had achieved the kind of success that had eluded him despite years of effort and family support. "So, what happens now?" Marcus asked, abruptly, breaking the contemplative silence that had settled over the room. "Now that we know the truth about your secret empire, what's supposed to change? Do we all pretend that the last 8 years didn't happen? Do we start over with you as the family success story instead of me?" The bitterness in his voice was painful to hear, but it also revealed the competitive dynamic that had always complicated our sibling relationship. Marcus had built his identity around being the entrepreneurial member of the family, the one with vision and ambition who would eventually achieve the kind of business success that our parents valued. My revelation didn't just expose his failures, it undermined the narrative that had sustained his self-image through years of setbacks and disappointments. "Nothing has to change about your relationship with Mom and Dad," I said, trying to address his concerns without dismissing their validity. "My business success doesn't diminish your accomplishments or your potential. We're different people with different skills pursuing different opportunities. There's no reason for this to become competitive." "Easy for you to say," he replied with a laugh that contained no humor. "You've been sitting on this information for years while watching me struggle with venture after venture. You could have offered advice or guidance or even just moral support from someone who actually understood what I was going through. Instead, you let me fail repeatedly while you secretly succeeded beyond anything I ever attempted." The accusation forced me to confront an uncomfortable truth about my choices. I had watched Marcus struggle with his businesses while possessing knowledge and experience that could have been helpful. My decision to maintain secrecy had prevented me from offering the kind of support that might have improved his chances of success, or at least helped him avoid some of the more obvious mistakes that contributed to his failures. "You're right that I could have been more helpful," I admitted, accepting responsibility for at least part of the damage my secrecy had caused. "I was so focused on protecting my own business from family complications that I didn't consider how my knowledge might have been valuable to you. That was selfish, and I'm sorry for it." The apology seemed to catch him off guard, and his defensive posture softened slightly. "Don't apologize," he said after a moment. "I probably wouldn't have listened anyway. I was so convinced that I understood business better than anyone else in the family that I ignored most of the advice I did receive. Adding your voice to the chorus probably wouldn't have changed anything." His admission revealed a level of self-awareness that surprised me. Marcus had always been skilled at deflecting responsibility for his failures onto external circumstances or inadequate support from others. Acknowledging his own role in his business disappointments suggested that he had been doing more serious reflection about his patterns than I had realized. "The question is what we do moving forward," my father said, reasserting his role as the family's primary decision-maker. "Sarah, you've built something impressive, and despite our hurt feelings about how you managed the situation, we're proud of what you've accomplished. But maintaining family relationships requires transparency and mutual respect. If you want us to be part of your life, you need to stop treating us like potential threats to your professional success." His perspective was reasonable, and I found myself nodding in agreement despite my lingering concerns about family involvement in my business operations. The secrecy that had protected my company during its vulnerable early years was no longer necessary now that Reynolds Capital Holdings had achieved sufficient scale and stability to withstand whatever complications might arise from family awareness. "I can commit to much more transparency about my professional activities," I said, making the concession that would fundamentally alter our family dynamics moving forward. "But I also need you to respect that I've built something that requires professional, management and can't be treated like a family project that everyone gets to influence. We understand that your business needs to be managed professionally, my mother said, her tone suggesting she was making an effort to bridge the emotional gap that had opened between us. But we also hope that understanding your actual circumstances will help us relate to you more appropriately. We've been treating you like someone who needed guidance and protection when you were actually more successful than any of us realized. The irony of her statement was not lost on me. They had indeed been treating me like someone who needed guidance, but their guidance had been based on fundamental misunderstandings about both my circumstances and my capabilities. Learning about my business success would certainly change how they perceived my need for advice, but I wasn't convinced it would change their desire to provide it. There's something else we need to discuss, I said, deciding that complete transparency required addressing the most uncomfortable aspect of our situation, something that makes this whole conversation even more complicated than you realize. My father's eyebrows rose with the expression he wore when sensing that additional information was about to emerge in a legal proceeding. What else could there possibly be? He asked with weary resignation. I took a deep breath, knowing that what I was about to reveal would transform their understanding of our family's financial relationships in ways that none of us could predict or control. 18 months ago, Reynolds Capital Holdings acquired a portfolio of residential mortgages from Cascade Regional Bank. That portfolio included several hundred individual loans, including yours. The silence that followed my announcement was so complete that I could hear the distant sounds of traffic from the street below and the hum of the building's ventilation system. My parents stared at me with expressions of complete incomprehension, as if I had just informed them that I was actually an alien from another planet who had been studying human behavior for scientific purposes. "What do you mean, our mortgage?" my mother asked finally, her voice barely above a whisper. "I mean that when you make your monthly mortgage payment, that money ultimately comes to me as the investor who holds your loan," I explained as gently as possible. "You continue dealing with the same servicing company and making payments to the same account, but the legal ownership of your mortgage was transferred to my company as part of a larger portfolio transaction." My father's face went through several color changes as he processed the implications of what I was telling them. "You own our house?" he asked with the kind of stunned disbelief typically reserved for learning about major betrayals or catastrophic medical diagnoses. "I own your mortgage, which means I hold the legal right to receive your monthly payments and, in the event of default, to initiate foreclosure proceedings," I clarified, though the distinction probably felt meaningless from their perspective. "The house itself remains your property, as long as you continue making payments according to the loan terms." Marcus leaned forward in his chair, his business experience allowing him to grasp the financial mechanics more quickly than our parents. "So when Mom and Dad make their mortgage payment every month, they're literally paying money to the sister they've been lecturing about financial responsibility?" he asked with something that might have been admiration or horror. "That's exactly right," I confirmed, feeling the full weight of the irony that had been building for 18 months. "Every month, they make a payment to Pacific Coast Servicing, which then forwards that money to Reynolds Capital Holdings as the investor who purchased their loan from the original bank." The room fell silent again as each family member contemplated this revelation and its implications for how they understood our relationships and their own financial circumstances. The lectures about building wealth through real estate investment, the concerns about my ability to understand complex financial concepts, the advice about conservative approaches to money management, all of it had been delivered to someone who was literally profiting from their most significant financial obligation. "How long have you known?" my mother asked, her voice hollow with shock. "I discovered it after the transaction closed, when I received the detailed loan files for the entire portfolio. I didn't specifically target your mortgage, but I also didn't sell it to another investor once I realized what had happened." "Why not?" my father demanded, his professional instincts engaging as he began to consider the ethical and legal implications of the situation. "Wouldn't the appropriate response have been to divest yourself of our loan to avoid any appearance of conflict? Of interest?" The question forced me to confront motivations that I hadn't fully examined, even privately. Why had I kept their mortgage instead of selling it to another investor? The practical business reasons were valid. Their loan was performing well and represented a solid investment that aligned with my portfolio strategy. But there were also personal reasons that were more complicated and potentially less defensible. Honestly, I said, deciding that this moment required complete honesty regardless of how it reflected on my character. Part of me found a certain satisfaction in knowing that your financial security depended on the business competence of the daughter you had consistently underestimated. It felt like poetic justice after years of having my professional capabilities questioned and my ambitions dismissed. The admission hung in the air between us like a toxic cloud, revealing aspects of my personality and motivations that were probably better left unspoken. But the conversation had already crossed so many lines of normal family discourse that adding one more uncomfortable truth seemed almost inevitable. "That's vindictive," my mother said quietly, her disappointment evident in every syllable. "We may have underestimated your capabilities, but we never wished you harm or deliberately tried to undermine your success. To discover that you've been profiting from our mortgage payments while allowing us to worry about your financial future, that feels deliberately cruel." Her assessment was harsh, but not entirely unfair. There had been moments over the past 18 months when I had felt uncomfortable about the situation. Times when their financial advice had seemed particularly ironic, given that I was literally their creditor. But I had justified my continued ownership of their loan by focusing on the business rationale rather than examining my personal motivations. "You're right that there were vindictive elements to my decision," I acknowledged, forcing myself to own the less admirable aspects of my choices. I was hurt by years of having my professional judgment questioned, and there was definitely satisfaction in knowing that I was successfully managing an investment that included your mortgage. That wasn't my finest moment as either a business owner or a family member. Marcus shook his head slowly, his expression suggesting that he was struggling to process the full scope of what had been revealed during this conversation. "This is unreal," he said finally. "Sarah, you didn't just build a successful business. You built a successful business that literally owns our parents' house. The level of irony here is almost too much to handle. It doesn't change anything about their relationship to the property or their payment obligations," I said, trying to steer the conversation toward more practical considerations. They continue to build equity through their monthly payments, and their mortgage terms remain exactly what they were before the portfolio transfer. From their perspective, nothing has changed except who ultimately receives the investment returns. "Everything has changed," my father corrected sharply. "Our monthly mortgage payment is no longer going to some anonymous institutional investor. It's going to our daughter, who has been sitting at our dinner table listening to us discuss our financial planning, while knowing that she holds our mortgage and could theoretically foreclose on our home if we ever defaulted." The power dynamic implications he was identifying were real and uncomfortable. While I had no intention of ever using my position as their creditor inappropriately, the knowledge that I possessed that legal authority would inevitably influence our family relationships in ways that none of us could fully predict. "I would never use my position as your mortgage holder inappropriately," I said, though I realized that my assurances probably carried limited weight given how much they were learning about my capacity for maintaining secrets. "But you're right, that this creates complicated dynamics that we'll need to navigate carefully." My mother stood up abruptly and walked to the windows overlooking Elliott Bay, her shoulders tense with emotions I couldn't fully read. After several minutes of silence, she turned back to face us with tears in her eyes. "Sarah, I need to understand something," she said, her voice trembling with the effort to maintain composure. "When you decided to keep our mortgage instead of selling it to another investor, what were you hoping would happen? What was the end game of this situation?" The question forced me to confront the fact that I had been managing the situation reactively rather than strategically, making choices, based on immediate emotional impulses rather than considering long-term consequences for our family relationships? I honestly don't know, I admitted. I think I was so focused on protecting my business from family complications that I didn't think through the implications of holding your mortgage. It felt like a private vindication at first, but I never developed a plan for how to handle it, long-term. Well, we need a plan now, my father said with the decisive tone he used when moving legal proceedings toward resolution. This situation can't continue indefinitely without causing permanent damage to our family relationships. Sarah, I think you need to decide whether you want to be our daughter or our creditor, because maintaining both roles indefinitely is going to destroy any chance of healthy family dynamics. His ultimatum was delivered with characteristic directness, but it also reflected a fundamental misunderstanding of how modern mortgage markets operated. My role as their creditor was largely administrative, involving monthly payment processing and periodic portfolio reporting rather than personal relationship management. Selling their loan to another investor wouldn't eliminate the creditor relationship. It would just transfer it to someone else who would be less invested in their personal well-being. Actually, I think there might be a third option, I said, an idea beginning to form as I considered the unique nature of our situation. What if I restructured your mortgage to eliminate the monthly payment obligation entirely? I could convert your remaining balance to a family loan with different terms that would allow you to build equity without making payments to your daughter. The suggestion surprised everyone, including myself. I hadn't planned to make such an offer, but it seemed like a creative solution that could address the ethical complications while providing my parents with a significant financial benefit that reflected my appreciation for their support throughout my education and early career. You would forgive our mortgage? My mother asked, her voice barely audible. Not forgive it exactly, but restructure it in a way that eliminates the monthly payment burden while still allowing you to build equity in the property. I could structure it as a family loan that gets repaid when the property is eventually sold, either during your lifetime or as part of estate planning. The offer represented a significant financial gift, probably worth several $100,000 over the remaining term of their mortgage. But it also represented something more important, a gesture of reconciliation that acknowledged both the hurt my secrecy had caused and my genuine appreciation for their role in providing the foundation for my success. The room fell silent as my family contemplated this unexpected turn in a conversation that had begun with accusations and hurt feelings. Outside the conference room windows, Seattle's afternoon light was beginning to fade into the gray twilight that characterized the city's autumn evenings. Inside, we were attempting to navigate family dynamics that none of us had ever experienced or imagined. The resolution of this conversation would determine whether my business success ultimately strengthened or destroyed the family relationships that had shaped my entire life. After years of maintaining separation between my professional achievements and personal connections, the moment had arrived to discover whether transparency and vulnerability could repair the damage that secrecy and protection had caused. 6 months after that devastating afternoon in my conference room, I stood in the kitchen of my parents' house preparing Sunday dinner, while my father reviewed the final documents for Marcus's newest business venture. The familiar sounds of family. Conversation filled the space, but everything about our dynamics had fundamentally changed since the day my secret life collided with their assumptions about who I was and what I had accomplished. The mortgage restructuring I had offered during our confrontation had been completed within 3 weeks, transforming their monthly payment obligation into a family loan that would be settled when they eventually sold the property. The gesture had accomplished exactly what I had hoped. It removed the uncomfortable dynamic of profiting from their housing payments while demonstrating my commitment to repairing the damage my secrecy had caused to our relationships. But the more significant transformation had been gradual and much more complex than simply resolving the financial complications. Learning about my business success had forced all of us to reconsider assumptions about capability, ambition, and family roles that had shaped our interactions for decades. The process had been painful at times, requiring conversations about disappointment, resentment, and missed opportunities that none of us had wanted to have. Marcus walked into the kitchen carrying a thick folder of business planning documents, his expression more serious and focused than I had seen during any of his previous entrepreneurial phases. The failure of his coffee roasting venture had coincided with the revelation about my success, creating a period of profound self-reflection that had ultimately led to a completely different approach to business development. "Sarah, would you mind reviewing these financial projections when you have time?" he asked, setting the folder on the counter with careful deliberation. "I want to make sure my assumptions about market penetration and customer acquisition costs are realistic before I approach any potential investors." The request represented a complete reversal of our previous dynamic, where Marcus had typically presented his business ideas as fully formed concepts that required only financial backing rather than strategic analysis. His willingness to seek my input, and more importantly, his recognition that my expertise might be valuable to his planning process, demonstrated growth that went far beyond simple acknowledgement of my professional credentials. "I'd be happy to look at them," I replied, genuinely pleased by his approach. "What's the business concept this time?" "Financial literacy coaching for young adults," he said with the kind of quiet confidence that suggested genuine conviction rather than desperate enthusiasm. "I've been working with a nonprofit organization that provides credit counseling and debt management services, and I've realized there's a huge gap in the market for preventive education rather than crisis intervention." The concept was exactly the kind of sustainable, socially beneficial venture that had the potential for both meaningful impact and long-term profitability. More importantly, it aligned with skills Marcus had actually developed through his previous failures and recovery process, rather than representing another attempt to break into an industry where he lacked relevant experience. "That sounds like something with real potential," I said, meaning it sincerely. "Financial education is definitely an underserved market, and your personal experience with both business challenges and recovery gives you credibility that most consultants can't match." Our conversation was interrupted by my mother calling from the dining room that dinner was ready. As we gathered around the table where so many difficult conversations had unfolded over the years, I marveled at how different the atmosphere felt now that we were operating from a foundation of mutual respect rather than unspoken assumptions about each other's limitations. The change in my parents' attitudes had been perhaps the most dramatic transformation of all. My father, who had spent years offering unsolicited advice about career planning and financial management, now sought my perspective on real estate investments and business strategy decisions. My mother, who had worried constantly about my financial security and marriage prospects, had become one of my strongest advocates in the social circles where she had once felt compelled to make excuses for my modest lifestyle. The shift had required adjustment periods for all of us. My parents had needed time to process their own feelings about missing such a significant aspect of my life, while I had needed to learn how to accept their interest and support without feeling threatened by potential interference. The boundaries we had eventually established honored both my professional autonomy and their desire to be genuinely supportive rather than merely well-intentioned. Marcus had perhaps made the most significant personal changes, using the revelation about my success as a catalyst for examining his own patterns and motivations. His decision to enter therapy had been voluntary, motivated by recognition that his repeated business failures reflected deeper issues with planning, execution, and realistic goal setting that couldn't be solved simply by finding better funding sources. The therapy had led to insights about his relationship with risk, his need for external validation, and his tendency to pursue business opportunities based on their potential for impressing others rather than their viability in competitive markets. Armed with this self-awareness, his new venture represented a fundamental shift toward building something sustainable rather than spectacular. During dinner, our conversation naturally turned to business and financial topics, but now these discussions included rather than excluded me. My parents asked thoughtful questions about mortgage market trends and their implications for the broader economy. Marcus shared insights from his nonprofit work about the psychological barriers that prevented young adults from developing healthy financial habits. The dynamic felt like what family conversations should have been all along: exchanges between adults who respected each other's expertise and experience while maintaining the emotional connections that made their opinions matter. The transformation hadn't happened overnight, and there had been moments of tension when old patterns threatened to reassert themselves. But we had all made conscious efforts to build something healthier than what had existed before. After dinner, as we moved to the living room for coffee and dessert, my father surprised me with an announcement that demonstrated how thoroughly our family dynamics had evolved. "Sarah, your mother and I have been discussing ways to use the equity. We're building in this house more strategically," he said, settling into his favorite chair with the deliberate manner that indicated he had been planning this conversation. "Now that we don't have monthly mortgage payments, we have several $100s each month that we'd like to invest, rather than simply adding to our savings account. We were hoping you might be willing to help us understand our options for real estate investment, possibly even allowing us to participate in some of the opportunities you pursue through Reynolds Capital Holdings." The request represented exactly the kind of family involvement in my business that I had spent years trying to avoid. But coming now, after months of rebuilding trust and establishing appropriate boundaries, it felt like an opportunity rather than a threat. They were approaching me as a professional whose expertise they respected, rather than as a family member whose decisions they wanted to influence. "I'd be happy to discuss investment options with you," I said carefully. "But I think it's important that we maintain clear distinctions between family relationships and business relationships. If you decide to invest with Reynolds Capital Holdings, you would be treated exactly like any other client, with the same fees, the same reporting, and the same level of professional service." "We understand that completely," my mother assured me. "We're not looking for special treatment or family discounts. We want to work with you because we trust your judgment and believe in your approach to ethical investing, not because you're our daughter." Her clarification addressed my primary concern about mixing family and business relationships. As long as they understood that investment decisions would be made based on professional criteria rather than family considerations, their participation could actually strengthen rather than complicate our evolving dynamic. The conversation continued for another hour, covering topics ranging from risk tolerance assessment to portfolio diversification strategies. My parents asked informed questions and listened carefully to my explanations, demonstrating the kind of engagement with my professional expertise that I had always wanted but never expected to receive. As the evening wound down and we prepared to part ways, Marcus approached me with an expression that suggested he had something specific he wanted to discuss privately. "Sarah, I owe you an apology," he said once we had stepped onto the back deck, where our conversation wouldn't be overheard. "Not just for my reaction when I found out about your business, but for years of taking your support for granted while dismissing your capabilities. I've been thinking a lot about our childhood and the different ways Mom and Dad treated our ambitions. You were right that I received unconditional support for every venture, while your interests were consistently minimized. I benefited from that dynamic without questioning whether it was fair or recognizing how it might have affected you." His acknowledgement meant more to me than any business success or professional recognition I had ever received. The validation was coming from someone who had shared my childhood experiences and could understand the subtle ways that family dynamics had shaped both our self-perceptions and our relationships with each other. "Thank you for saying that," I replied, feeling years of accumulated resentment beginning to dissolve. "I appreciate the apology, but I also want you to know that I'm genuinely excited about your new business concept. Financial literacy coaching is exactly the kind of work that could make a real difference in people's lives while building something sustainable for yourself." We spent several more minutes discussing his business plans and my willingness to provide mentoring as he developed his concept. The conversation felt like the beginning of a genuine partnership between equals, rather than a continuation of the competitive dynamic that had characterized our relationship for so many years. Driving home to my downtown loft that evening, I reflected on how completely my life had changed since that afternoon when Marcus's phone call had shattered the careful separation I had maintained between my professional success and family relationships. The revelation had been painful and complicated, but it had also created opportunities for authentic connection that would have been impossible while I was maintaining my elaborate fiction about being a struggling financial consultant. The business had continued to thrive despite my fears about family interference disrupting operations or damaging professional relationships. If anything, having their support and understanding had reduced the emotional energy I had been expending on managing my double life, allowing me to focus more completely on strategic development and expansion opportunities. Reynolds Capital Holdings was now managing over $300 million in mortgage assets across 5 Western states, with institutional clients that included pension funds, insurance companies, and community development financial institutions. Our success rate in converting distressed mortgages to performing loans had attracted attention from federal housing agencies, and I had been invited to testify before congressional committees about policy reforms that could improve modification outcomes nationwide. The professional recognition felt more meaningful now that I could share it with family members who understood its significance and took genuine pride in my achievements. My parents had attended the awards ceremony where I received recognition from the National Association of Housing Counselors for Ethical Lending Practices. Marcus had insisted on promoting my congressional testimony through his social media networks, proudly identifying me as his sister who was helping families avoid foreclosure while building sustainable investment returns. These gestures of public support meant more to me than the recognition itself, representing a fundamental shift in how they perceived my work and its value. They were no longer embarrassed by their daughter's unconventional career path or worried about her financial security. Instead, they had become advocates who spoke knowledgeably about alternative approaches to mortgage investment and the social benefits of ethical lending practices. The transformation extended beyond professional recognition to personal relationships as well. I had begun dating David Morrison, a housing policy attorney whose work complemented my business focus while providing emotional support that was grounded in genuine understanding of my professional commitments. Having family members who could relate to him as Sarah's partner, rather than as a potential solution to their concerns about my unmarried status, had eliminated layers of complexity that might have otherwise interfered with the relationship's development. As I parked in my building's garage and rode the elevator to my penthouse apartment, I contemplated the view from my floor-to-ceiling windows that showcased Seattle's skyline and Elliott Bay. The space reflected my success in ways that my previous, modest lifestyle had deliberately concealed, but it also reflected values that remained consistent with who I had always been. Functional elegance rather than ostentatious display, investment in quality rather than quantity, appreciation for natural beauty rather than manufactured luxury. The apartment had become a place where I could entertain clients, host family gatherings, and build personal relationships without maintaining artificial distinctions between different aspects of my identity. The integration felt liberating in ways I hadn't fully anticipated when I first decided to reveal the truth about my business success. My phone buzzed with a text message from Janet Morrison, my first major investor and ongoing business partner, congratulating me on the latest quarterly performance reports and suggesting we schedule a strategy session to discuss expansion into additional geographic markets. Her continued confidence in my leadership, even as my personal circumstances had become more complex, reinforced my conviction that transparency had strengthened rather than weakened my professional relationships. Another message came from Maria Santos, my client relations manager, forwarding appreciation from a family whose home we had helped them keep through a creative loan modification that addressed both their temporary income reduction and long-term affordability concerns. These success stories remain the most satisfying aspect of my work, proving that profitable business practices and social impact could be successfully integrated when guided by appropriate values and long-term thinking. The evening concluded with a call from my mother, who wanted to share news about a conversation she had enjoyed with her book club about alternative investment strategies and ethical business practices. Her enthusiasm for understanding and discussing my work represented a complete reversal from the polite disinterest that had characterized her previous responses to my professional activities. "Sarah, I want you to know how proud we are of everything you've built," she said, her voice carrying emotion that suggested deeper meaning than simple maternal affection. "Not just the business success, but the way you've maintained your values, while achieving financial goals that seemed impossible when you first left the bank. We may have been slow to recognize your capabilities, but we see them clearly now, and we're grateful that you were patient enough to give us the opportunity to support you properly, instead of writing us off completely when we failed to understand what you were doing." Her words provided closure to years of feeling misunderstood and undervalued by the people whose opinions had mattered most to me throughout my childhood and young adulthood. The recognition was coming later than I had hoped, but it was genuine and informed rather than perfunctory, making it more meaningful than earlier acknowledgement might have been. As I prepared for bed that night, I realized that the revelation of my secret business success had ultimately given me something more valuable than professional validation or financial security. It had provided the foundation for authentic relationships, with family members who could finally see and appreciate me for who I actually was, rather than who they had assumed I should become. The journey from secrecy to transparency had been painful and complicated, requiring conversations and confrontations that none of us had wanted to navigate. But the outcome had been transformation rather than destruction, growth rather than division, deeper connection rather than permanent estrangement. Tomorrow would bring new challenges as Reynolds Capital Holdings continued expanding, and my family continued adjusting to our evolved dynamics. But tonight, for the first time in years, I felt completely aligned between my professional identity and personal relationships, no longer needing to maintain artificial boundaries between the different aspects of my life. The empire I had built, in secret, had finally become something I could share with the people I loved most, creating possibilities for support and connection that I had never dared to imagine during those early years when I was building something they couldn't understand or appreciate. The foundation was finally strong enough to support both business success and family relationships, proving that authenticity and achievement could coexist when guided by patience, courage, and genuine commitment to growth. Up next, you've got 2 more standout stories right on your screen. If this one hit the mark, you won't want to pass these up. Just click and check them out.